Hey Earthlings, I'm Chris and this is Space Foods. Thanks for watching, and for those people who subscribed, it looks like I have 5 subscribers. Thank you so much, I'm honored. I just wanted to announce that this is video 15 out of 30 that I've planned for this project. For those of you who maybe missed it at the start, when I started putting these videos out, this is a personal project of mine. I had a goal, really two things. One, I wanted to learn about this new industry, and second, I wanted to just do some video editing and try and improve some of my video editing skills. So the best way of learning something is to teach others, and while I'm not necessarily starting this channel to educate, I'm starting this channel as a way to just put some videos out there, and if people find it helpful, that's great. But ultimately, it's been a personal project of mine, and I'm doing that through 30 videos that I'm thinking about over time. And then I'll see where it goes. Maybe I'll decide that this is cool to continue with. Maybe I'll decide that I want to do something completely different. Again, for those of you who've subscribed, thank you. It's actually really cool. If you have any comments below, happy to hear feedback. If this is helpful, maybe I just suck, that's fine too. Happy to hear those comments. So you know there's going to be 15 more videos, and then we'll see where we go from there. This video, number 15, I think is very fitting to start thinking about how we're going to value cold food science and agronomics. I'm not going to actually get into that in this video. What I'm going to talk instead about is how you need to look at those companies, because they're VC firms, they're not public companies, and so there's a very big difference in how you need to think about them if you're used to thinking about public companies. I'm going to talk about that, and then I'm going to look, the second part of the video is I'm going to look at a valuation that another YouTuber has done and just do some projections based on that. When I started looking into these VC firms with cold food science and agronomics, I was like, okay, surely someone out there has done a valuation that I can look at to get some information on these companies. And I've looked everywhere on the internet that I can possibly look: YouTube, Reddit, just actual investment firms, and I can't find anything anywhere that's really helpful to me. So my goal by the end of these 30 videos is to create a valuation model that is helpful and not just some bullshit that you see on the internet. We'll see if I achieve that or not, but that's my goal, and that's where I'm going to get at the end of these 30 videos. Thanks again for supporting. Let's get into the video. So when I started looking into these VC firms, right, they have all their portfolio companies. They all look like they're doing cool things. Here's Cold Food Science, and here's Agronomics. And then I started trying some of the foods. So I've tried, where are we? I've tried, they don't invest in Perfect Day. So I've tried Every and I've tried Perfect Day. I'm hoping when I drive down to the Bay Area in a couple of weeks that I may be able to try some of these other companies. But yeah, I've tried them, and Bio has a honey that they're doing tests on in New York, I believe, in Brooklyn. So maybe I'll get there. Eat Just is selling cultivated chicken in Singapore, so I want to try and go there as well. Kind of once I get a few of these taste tests done, that's really going to completely give me conviction that, okay, these companies are actually able to do what all of this stuff on this website says that they can do. Key point though, that does not mean that in the long term that these companies are going to be successful or that they will even be good investments. This just confirms, and I really want to emphasize this, that they can make a prototype and they can make a product. Really, my first level of conviction is this industry even feasible? Like, that's the first thing that I'm trying to see. Like, is this industry even feasible, or is it just a bunch of fluff? Is it just a bunch of hot air? Those questions are just going to answer the first question, which is this industry feasible? I think long term, if you're looking at this as an actual investment, you want to know, well, obviously the industry needs to be feasible, but you want to know, can we actually scale these products up? Can we build full size production plants? Like we saw in the video yesterday, right? We need to actually make cultured meat and not just make, 5% with a bunch of other crap thrown in there. We need to be actually completing the mission. So the first question is this industry feasible from a technical standpoint? Can we build those prototypes? But then the second question is, can we actually, in the long term, 10, 15 years, actually scale this up and build companies that are going to achieve the mission of actually having cultivated meat, actually reducing the environmental issues of factory farming, which we have, and all those other issues that you saw in my video yesterday. Card in the corner, if you haven't watched that, the big warning to investors, that's all about scaling. I didn't get into Tesla, which was a public company. They'd already gone through all the private stuff. They'd already IPO'd until they had a successful Model S ramp. Keep that in mind because we are very far away from that in this industry. Not to say that this isn't a good industry to be in, but to say that these VC firms are being traded on the public markets, and most public investors probably have no idea what this actually means. I was looking at these VC firms and I'm trying to figure out, do I want to invest in this firm? Because these are really cool companies. In theory, the ones I've tried so far are pretty good. Is it worth putting my money into this stock? And is it worth putting my money into this stock? Or should I wait until, say, every company IPOs, or there's been rumors of just IPOing, there's been rumors of Perfect Day IPOing. Those are probably the three that I can think of off the top of my head that would be the closest to IPOing, maybe in the next year or two. Is it worth me waiting for them to IPO to then put my money in there? For me, my decision was I kind of want to build this industry and let's just see where it goes. Let's look at just quickly Cult Food Science. We're trading at 4 cents. If you put your money in at IPO, where it was 26 cents, you'd be down 84% right now. They did have a top of 65 cents, so if you put your money in there, it would be even worse. For Agronomics, you'd have done better if you would have gone in 2011. We were at about 8.25, 9 pounds. They're based in London. Now we're trading at 13 pounds today. So you'd actually had a decent return at 50%. I want to get into a bit more of, okay, well, how do you know from today, like, where is this going to go? Because as I've said before, I think of this opportunity as one that is going to take 10 to 20 years. Why do I think that? How does that affect what I think the share price is going to be? And how do I start thinking about valuing these companies? What I did is I tried to find as many people that were talking about valuations on YouTube, because while I've done modeling work before, I've mostly worked with public companies, and my knowledge of how to value private companies is essentially non-existent. I really wanted to try and understand from people online. So far, I haven't been able to find any helpful information online. There's a number of YouTube videos, and they just don't quite tell me everything I need to know. I'm putting together a document here. There's a few different parts. The first part is really talking about the venture capital funding rounds. We have these different stages, and unlike public companies, private companies really follow a step-by-step stage. So if you're in a seed stage, you're roughly going to be valued at X million dollars, whereas if you're in a growth stage, that might be a lot higher, in the tens of millions of dollars. Let's just say $5 million here, maybe you'll be 100 million in the venture growth stages, somewhere, something like that. And that's quite regimented. If you're in that stage, it's pretty easy to say, well, this company is between 100 and 200 million, for example. That gives you a very good idea of how to actually value these VC firms. The pre-seed stage is really the mom and dad stage. If you're starting a company and you want to get some money, go to your friends. You're like, hey, help me out. I just need to fund this idea and see where it goes. So there's no product, there's nothing built yet. You're really starting with your idea. And that's what the pre-seed stage is. Now you have VC firms or other investors, angels, people with a lot of money that will put in between $100,000 and $5 million in this pre-seed stage. If mom and dad don't have money, there are investors who will help you. And one of the pros that I like about Cult Food Science is that most of their companies, most of their investments are in the pre-seed stage. So that means a lot more risk because basically I'm saying I'm going to be mom and dad. I'm betting that they will do well and maybe I'll lose all my money. The risk is a lot higher for Cult Food Science than for somebody like Agronomics, where a lot of their investments are in the Series A, B, and C stages where companies actually have a product. They actually have early versions of their product, or they have a functional product, or they even have a fully developed product and they're making revenue. For Agronomics, it's a much safer bet because you're investing in proven businesses. It's not just an idea. They have some seed investments. That's probably the biggest difference between these two VC firms is with Agronomics, you're actually investing in businesses, whereas with Cult Food Science, you're still kind of investing in science experiments. These are just ideas. And I think a lot of these ideas will go somewhere, but maybe they won't. Cult Food Science is really trying to build the industry, whereas Agronomics is really trying to be a good investor for companies that need money later on down the road. For me, my personal investment strategy was let's go all in on Cult first because I think 4 cents is oversold with our recent economic issues. If we are to go back to this 65 cents all-time high, or even if we get back to where they were at IPO at 26 cents, for me, if I'm buying in at 4 cents, either of those are a pretty good return. Or for Agronomics, I would look at it a bit differently. Again, I think over the 10-year period, I would need to look a lot more closely at their companies and what stages they are, because that will really determine my investment. If we get to the seed round, this is really the first funding stage. Pre-seed stage, there is no valuation of the company. The first valuation actually happens here. This is between $2 and $10 million, generally speaking, and it's supposed to last between 12 and 18 months. Then there's generally 3 ways that the founder can go after they raise the seed round. The most common is that maybe it doesn't work out, the startup doesn't scale, and it just goes bust. With Cult Food Science, we can see, okay, we have quite a few companies here that are in the seed round. Maybe none of them will make it. And so that will give us Eat Just, BSF, Stakeholder Foods, Cell, AG Tech. We'll have like a handful of companies that will succeed. Second, maybe the seed round's all the company needs, and they can then fund their own growth via their customer acquisitions and revenue, and maybe get some additional debt financing. Maybe they don't even have to do other rounds. And then the last option, which is the most traditional route, if you're going to VC firms, then you'll fund these additional rounds, ABC series rounds. Okay, so you first get a valuation of the company here. Then for your early stage, this is where you've actually developed your product. It's being produced and marketed. You want to add employees, have more permanent office space. Maybe you're turning a profit, but it's not necessarily covering all your operational costs, so you need a bit more money to grow. So this is where you're looking at the next round. This would be the early stage or the venture stage rounds here. And this would be giving you the Series A. To be in your venture stage where you'd be looking at a Series A, and that generally lasts between 6 to 18 months. And maybe after that you need another round, and that would generally last you between 6 to 36 months. We're looking at a minimum of 12 months between, if you're doing 2 rounds of funding, to maybe up to 60 months to be in that early stage venture funding round. Okay, and then we get into the venture growth pre-IPOs, and this is where your Series C happens, and the Series C is meant for companies that have already proven themselves with a business model, but they need more capital for expansion. If you've made it to Series C, you're already a very successful business. The earlier stage rounds are used to help you find that traction in the market and find your product market fit and find people who are going to buy your product, and then you can grow that model that you've developed. Series C is really that first round of growth funding. You're already established by the time you get here and you're growing. This is just meaning when you see venture growth or pre-IPO, typically if you're a founder and you're going to be doing VC funding, you're going to be with that investor for about 5 to 7 years. And if we look at kind of the fastest you could go, you're looking at about 3.5 years with these different Series A, B, C rounds. The slowest you could go is really about 10 years. Sometimes you might even be with certain investors for 10 to 12 years, but the typical cycle is a bit closer to 7 years. Why are these numbers important? Well, because when we look at cult food science and we look at agronomics, looking at what stage they're in and what the last deal that they had is going to tell us how many more years it might take to get a payout. Because these VCs, cult food science and agronomics, do not make any money until these companies either go public or they become acquired, right? Agronomics will probably make money faster because they're investing at later stages. The flip side of that is they might not get as good of a deal as cult food science would because they're taking a lot less risk. Cult food science is getting in a lot earlier, which would give them much better ownership of the company and potentially, if they do succeed, a higher payout at the end. That's really your risk reward difference there. Okay, so with that, I wanted to take a very quick look at one of the YouTubers that I'd seen put out a valuation for cult food science back when they IPO'd in January. They're called Road Trip to Fire. And what they did is at the time, cult food science had $2 million in their bank account. And then these were the market capitalizations of the companies at the time. We can see that since they've gone public, they've made additional investments. So De Novo Foods is new since they went public, California Cultured, Perlita Foods, Stakeholder Foods, Chain Foods, Unicorn Biotech, Valuation Education. This first model that this YouTuber did back in January is now obsolete because there's been more investments since then. We're going to have to wait for the next financial statement from them to get a better insight as to how they've done in 2022. This is kind of where they were around the start of the year. And then I'm starting to build out where they were on their first financial statement, which is March 31st, 2022. You can already see for some companies, they've already gone through new deal types and increased in valuation, or maybe they went from pre-seed to seed or seed to early stage where they got some valuation. Some of that's already happened within this year. What you're going to see here in the series that's marked here in January will be a bit different from what happened already in March. This one's actually, this deal type I've updated as of September 12th. Okay, so we take that and then we give cult food science percentage. This is the percentage that they own. So they own 100% of their $2 million in cash. They own 1% of Beef Tech. They own 3.8% of Cell AG. They own 6.4% of Mogul Meat. They own 0.8% of Novel Farms. Value in Canadian dollars would be, again, this is US dollars, so you'd have $200,000 here, $600,000 here, 300,000, so on and so forth. You have $5.9 million. And with 151,000 shares, we have 4 cents a share. When they IPO'd, this YouTuber said, we're at 4 cents a share. What that YouTuber did not do, that was just looking at what is called food science valued at that moment in time. So January, they were valued at 4 cents a share, but they were trading up at 26 cents a share, significantly higher. At the time, this person was saying, well, obviously I would not invest in cult food science because they're going to go down. But one of the things that they never looked at was, okay, January, that's what they're valued. But what happens when these companies start climbing this ladder, right? Over time, as long as they're successful and they don't all fall off a cliff, go bankrupt, as long as they actually find their proven business models and they're able to continue growing, and if they do climb into becoming successful businesses, what does that look like for the share price of Cult Food Science? No one has been talking about that. Okay, let's just say, hypothetically, all of these companies actually get to their Series C round. They actually find product market fit. They become full businesses. Roughly speaking, on average, companies in the Series C round are worth about $118 million. Okay, so I've gone and just made them all worth $118 million, except for eJust, which of course is being valued around $3 billion, and just said, okay, what would Cult own if that was the case? Well, of Beef Tech, they would be around 1.2 million. Cell AG Tech, they would then have 4.5 million, so on and so forth. So they would then have a balance sheet of almost $41 million compared to the $6.5 million they had in January. And you divide that by the 151,000 shares and you get 27 cents. Roughly speaking, that then puts you at kind of where they IPO'd, which I think is pretty interesting. But then you have to look at, okay, traditionally, most VCs, you only get a few companies that are actually going to be successful. And so one of kind of the metrics that people use in the industry is about 65% of the companies fail. So let's just say we all get, as a model, we get all of those companies to $118 million on their Series C round, but actually we don't because 65% don't actually make it. So we only get 35% of our companies to the Series C round. Well, then we end up with just over $14 million compared to the 6.5, and we would be looking at a share price of 9 cents. So this is saying we're in the Series C. Again, hypothetically. Then let's say, okay, well, we don't know. Let's just say actually they do even better, right? So if you look at my video for Blue Nalu, card in the corner, they're talking about how the gross profit is going to be 75%. So again, I'm not running Cult Food Science. I don't know when they're going to try and exit, but let's just say we actually get these companies to a significant level of growth where they're starting to make millions or billions of dollars, right? And so let's just say, for example, that all of these companies became billion-dollar companies. What I've done is I've modeled that out as well. I've said, okay, let's just say that Beef Tech is $1.3 billion company, that's what they're valued at some time in the future. So I just kind of took their current market cap in millions and I turned that into billions, because if we look at Eat Just as a potential model, they're valued at $3 billion. So what if all of these other companies, let's just say hypothetically, were this kind of a similar scale success as Eat Just is today? So they're in their Series D round. Let's say we get all these companies there. So we're looking at maybe, a billion, couple $1 billion companies. Again, let's just say that hypothetically, that's possible. So here would be the amount that is owned by Cult Food Science. So that would then put their balance sheet at over 300 million, right? And so then that would give you a share price of $2.23, which is significantly higher. Of course, 65% of these companies fail at some point, so only 35% of that is successful. That would still give you a share price of 78 cents, which brings us around the all-time high. It brings us a little bit higher as well. I haven't made any valuation at all for Cult Food Science or Agronomics, but those are some of just the thought exercises I've gone through when I've been thinking, okay, do I want to put my money into these VC firms? And ultimately, my risk reward essentially looks like, well, for now, and I've only done this for Cult Food Science, but for them, I'm thinking all of these trading bands make sense at some point in the next 10 years. I wouldn't be surprised if we hit any of the points that they have traded on. So if I'm going to go and spend 4 cents a share now and hold it for 10 years, following the valuation we just did, again, this isn't an official one, this is just me pulling numbers on my ass. Let's just see what numbers we would get. So if we buy 1 million shares of Cult Food Science today, that's a $35,000 investment at 35 cents a share. $40,000 investment at 40 cents a share. You get the idea. So if we get back to all-time highs, then we're putting in that $35,000 to $40,000, and we're coming out with $650,000 at the end of it. If I take 65 cents divided by, if I invested today $35,000, in theory, based on the valuation model we just did, we could get to all-time highs. So if we get to all-time highs, I'm looking at almost 20xing my money. There's so many reasons that all of their portfolio companies could fail for one reason or another. Maybe that 65% failure rate is more like 95%. Maybe it's even 100%. Part of my thinking as well is when I put my money in right now, especially because I don't know that much about the industry. I've done a few taste tests. I'm starting to build my conviction, but I still haven't even tried cultivated meat. I haven't tried a lot of these products. For me, like, this is quite a big gamble, and a lot of it's gambling. I'm still not at the conviction where I would even consider myself investing. But this is just, these are the odds that I'm looking at, and this is the thinking that I'm going through as I think about, okay, I'm going to put money into these firms. One of the things for Cult Food Science is that they might not even have any funding past this year, right? At the March 31st, 2022 financial statement, in financial statements, all companies are going to put in risks that they have. For Cult Food Science, they're a very small firm. They don't have a ton of funding. And although the company has been successful in obtaining the necessary financing to continue operations in the past, there can be no assurance that it will be able to continue to do so in the future, and that such funds will be available on terms acceptable by the company. Management intends to finance operating costs over the next 12 months with loans from directors and companies controlled by directors, and to restructure the company's debt, right? So most of the actual investments that have been made by Cult Food Science are debt that have been borrowed from other investors. Basically, what this whole paragraph means is that the company Cult Food Science, they have a pretty slick website, right? They're trying to build a platform where they have investments, they have a prize, and they're trying to have an IP platform. So they're really trying to build the industry, and they're trying to capitalize in the future on that IP. And that assumes that people are actually going to be continuing to invest in this firm. That might not happen. They could after the year is done, realize it doesn't work anymore, and then go move on to something else, and then the share price would go to zero. I'll put these sheets on Patreon. You can access it for free, but once I'm building my actual models. So I'll put the rapid fire valuation up on Patreon for free, and I'll put the pitch book part of my documents here on Patreon for free. For the other tabs, and as I actually start building a fund investment model, that's something that I'll only give out to people who are subscribing. Hope that was helpful in just giving you some things to think about if you're looking to invest in this space or if you're already investing in this space. Thanks for watching.